Hey, this is BA and we're doing range riders. You can see in the background, for some of you that have been around for a while, we've got the Gann squares because we're going to be squaring out price and time. This is Caterpillar stock daily chart here. The goal is to take the absolute high and the absolute low in prices and square the range with time. As you can see, up at the top, the absolute high was taken and a horizontal line was drawn across at a price of 173.24, and that high is January 16th of 2018. Normally you'd take the absolute low, which is here. We're going to take this absolute low and we'll come back to this, deal with this at a later time, because we're going to be analyzing the area all the way over to this point. So our interest is in this area within here. The lowest low within that quantification is right here, October 24, 2018 at 112.06. Again, you get the horizontal line going all the way across. The difference, which is the range, is 61.21 in price. Meaning the difference between that upper horizontal line and the lower horizontal line is a range of 61.21 in price. Now, there's a lot of areas in there where we could take these lines from. But for our analysis, as long as the price stays between those two white lines, we can analyze it within the range. Once it breaks out of the line, which it actually does over here, any line, top or bottom, once that range is broken, it's no longer valid running forward in time. That's a very important quantification there. Starting at the low, October 24th, a 45 line is entered using a calendar day count of 61.21. A calendar day count, not a trading day. A 45 line, if you're unfamiliar with some of the terminology, it's equal parts of time and price. Here, one day, one calendar day, would be equal to 1 point in price. Now, Gann stated that in our analysis, where our red line touches the white line, which you see it does up at the top after it was initially drawn, wherever that touches will be an important area for change in trend. So what I did was I drew a white line down, as you can see, to highlight that area. That line occurred on December 24th. The white line coming down was December 24th of 2018, missing the low by 2 days. And of course, the market was closed on Christmas. So on Christmas Eve is where our line comes down. And 2 days later was that low down there. There's a little bit of play in there. Some of you will call it orb. That's fine. A little bit of play. Our next 45 line was drawn hitting the bottom on February 23rd, 2019. That's right down here. As you can see, A white line was drawn up, and the high there was February 23rd, 2019. Which is where we drew it. The actual high was Monday the 25th. Again, 2 days off. A little bit of play in there. A little bit of play. $61.21 days were again added. Line drawn down. The point here is a smaller low around April 25th due date. It does miss the high by about 4 or 5 calendar days. Depends on in your trading and on your instrument how much play you're going to allow. In this video, it's a lot stricter. Here, June 25th, check the uptrend. Our August 26th point was a nice low on August 28th. Note that on August 28th, the white line from our originating low was breached, invalidating the October 24th low from that point forward. So at that point, again, once that low was broken, our 61.21 range became invalid. The new low would have to be used. And any subsequent lows that are lower than that would be used in the future. The high up there, in the upper left-hand corner, the high remains until it's broken. That could be 20 years from now. That could be tomorrow. Who knows? As long as that high remains and is not taken out, no matter how long in time it is, it's valid. The moment it gets taken out, then it's no longer valid. Here we didn't take out the high. Here we took out the low, as you can see down there, which invalidates our low back here. Same principle except for lows instead of highs. Very important fundamental concepts. Now let's get into this. What is actually occurring here? Well, there's actually more going on in the screen than what we've been talking about. Let's start taking a look at these deeper layers, the things that Gann didn't really point out to us directly. This has been one of my favorite markets for quite a while, decades actually. This is ticker SLV, which is the silver spider. Note the low on March 18th, 2020, the COVID low at 10.86. And the high February 1, 2021 at 27.98. The difference is 17.12, which would square every 17.12 days.